couple of times or something, but anyway, we'll speak. Let's get this done. Good morning, welcome to a morning outlook. This is Kim speaking on Thursday the 8th of June. So before we get on with the markets themselves, the currency markets, let's have a quick look at what's happening. Firstly, of course, the Canadian Bank of Canada, almost said Canada then, habit. The Bank of Canada has increased rates. That's the second surprise this week. The question now is, are we going to get a surprise next week? At the moment, it's still, the Feds are still looking like they're going to, well, it's expected that the Feds, look, I'll show you. Where are you? There we go. The Feds is a 65% chance. Now I've heard that's as low as 60, depending on what bond. If you're looking at the bond markets themselves, this is just a tool, Fed Watch tool. It's quite good normally, but it's still 65%. They'll leave them untouched. Now if they do that, I'll probably see the dollar sold a little bit, but who knows? It's hard to say. I shouldn't really second guess it. We'll see the dollar move. There we go. Cover all angles. Just a 35% chance of an increase at this stage, but still things could move on. That's two central banks that we've seen given surprises so far. The Canadian Bank of Canada, they started rate increases probably just shortly after New Zealand. They were one of the first to do it. Okay, they haven't chunked it up quite so high, but they've been doing it for a longer term, I believe. Anyway, there you go, 4.75. Now, aside of that then, what's been going on? Well, not a lot. We've got unemployment claims today, US unemployment claims. I really question why they have this in red. It's not the end of the, near the end of the beginning of the month even, so it's not like we've got non-farm payrolls the next day. It really doesn't do too much at all, generally. We know there's a tightening in the labour markets in the US, full stop. There's no real need beyond that. We've got this month's non-farms for the Canada tomorrow at 1:30, so that's it really. So I assume those figures to be half decent. Let's have a look at the markets then. Morning, Michael. Starting off looking euro dollar. And well, consolidation is still with us at this stage. I cannot trade this, as it says. I say cannot trade. Of course I could trade it, but I don't want to be trading it. Rephrase it. Yes, there are some movements, and it did actually pick up quite nicely at 8 o'clock there. It literally took out the bottom. I was sitting on my hands. I mean, everything lower highs here was looking right. This actually didn't quite take out the previous bottom there, but just completely reversed. Took out the bottom of the 7 o'clock bar. What's it going to do today? Probably chop. I don't know, maybe at some stage we'll see it break out. I'm waiting for it to get back to some sort of normality, but if there is such a thing, bigger ranges as opposed to intraday chop. The pound, well, it's doing a similar case. I mean, look at these little doji type candles, and it's in fact, let me just move that out of the way and click that there. There we go. See a little bit more detail. Hammer, doji, shooting star, current bars doesn't count, and it's, well, still in this sort of rising wedgy pattern here. We saw the spike above the previous shoulder there, which has killed the head and shoulders, so that's off. And just looking at it at the moment, I await your decisions in terms of where you're going to place your money, but I'm not going to be placing it on that. Okay, dollar yen. It's going to be a short one this today. Short. There we go. Chop chop. Still chopping in between. It broke out of my little wedge I drew there, but realistically, in a rising market and a wedge, I really want to see it running to the top side of things. Continuation. It's a continuation type pattern. If it starts breaking the bottom too much and we see more downside here, then well, it's time to forget it. And again, a bit like the well, pretty much this similar to the euro, and almost going the wrong way. The euro pound getting stronger at times. This is getting weaker at the the opposite times. It's weird markets. Aussie dollar, we do see that with the US dollar yen at times. It should be inverted effectively. Aussie dollars remaining relatively strong here. Had that bearish engulfing bar sitting there yesterday afternoon, and well, it's on the short term we've got a bit of a flaggy sort of pattern going on here. Could start breaking down post 8 o'clock down towards this S1, but the bigger trend here at the moment is to the upside, and well, I think you might be struggling if you start fighting against these intermediate trends for now. US dollar CAD, well, yesterday we came all the way down almost to the lows there, not far off them at all. The surprise saw it actually almost double bottom. It's not like it's gone off madly though. It's a bit like the Aussie dollar. It's had its move, and well, it's done it now, and it seems to be consolidating. If anything though, it's still got that hint of downside for the US dollar versus the CAD here. We could see just this carry on rolling over, but I can't see much in the way of trading opportunities from it. The weaker of them all, and generally New Zealand dollar, US dollar, it's not favoured in any way. Again, it's just consolidating. And whilst markets are doing this, and there's little rhyme or reason, you just got to sit out of them. As much as I like to, what we're trading today, nothing maybe. Again, I didn't trade yesterday. Just didn't get a setup. The Canadian dollar spoiled them. I say spoiled the markets. Hit the markets in the afternoon. There, all were affected. Here we're just seeing chop, and if anything, I would like to. This is a sort of a bearish flag in what was pretty much a bear market, and I would like to be on the short side of this. We'll see. It might turn into that flag might trigger and run over. Let's watch that. It's got the best potential for weakness unless the Aussie starts rallying. Favourite pairings: Euro yen. Yesterday ended up with bullish engulfing. There was stages when it looked like, well, that's going to roll back again. I was talking about it earlier in the morning, but nothing set up for me, and only for it to. It did actually. What was that yesterday? That's it. Yesterday it hit the double bottom and then bounced, and it's ranging at the moment. It might be scope for something on the range side of things, but. There's nothing for me at the moment. Euro pound, just looking at this on the short term here, just pretty much yesterday spent most of its time. I had that surge. Was it yesterday? I'm sorry, I'm on a 4-hour chart. That was last week. This surge last week. This week it's flatlining. Euro CAD, another one of my favourites. Well, we did see it sort of drop back down a bit there yesterday, only for it to chop ever since. It's all in the nicer scheme of things, and it looks lovely in this time frame, but if you're in it already from some way back, it's beautiful. I've kicked myself a couple of times because I did come out of a short that I'd played in it, but well, it hit target. And you can't second guess what a market's going to do. They don't all go to the moon and back. And this one at the moment, as you can see, shorter time frame here, lots of consolidation, surge, and then a sell-off yesterday, and we're seeing the consolidation again reappearing. So the story is pretty much the same. It doesn't matter what pairs I'm looking at. The pound CAD is in a similar picture. Aussie CAD, really, the two of them are, they're in step for a lot of the time. So the Aussie CAD was for me one that I wanted to. I did short it on Monday, but it never worked. It's still in this downward trend. Maybe at some stage we'll see it flip over. It's got this really a bit of a bear flag here. It's got scope to roll. Right, the daily S1's right on this yearly pivot, quarterly pivot, beg pardon. Right, nothing else there really at this stage, so let's switch markets and look at gold first. So looking at commodities here, so trying lower highs. It got affected yesterday, like so it went with the gold price yesterday. There we go. Everything got whacked. Would have thought this might have held on a little bit better. Just looks soft and a bit choppy. If you can't find what you're looking for, go and enjoy the weather, he says. Oil, well, it's just continuing the consolidation. Sorry, I come back to the dailies there. It's really just in this tight old range, and it's not even a clean range in terms of retracing from one side to the other side. It's, I mean, what it looks like at the moment, there's scope for it to run up to its R1 for sure, but movements are relatively short. Right, look at the equity markets this morning. Most of these have seen it sell off, with the exception obviously of the CSI 300. I'm still remain bearish on this, but had an update. The rest of the markets are down on the day. The Nikkei, second day down there, that bearish engulfing I spoke about yesterday, still in a bullish market, and it's filled some gaps here, so maybe it's sitting back on a yearly pivot that's sitting on here at the moment, so it's back to its yearly R2, finding a bit of support on at the moment. Nifty 50, this is also a bullish market. It's still running up there, some way to go before it gets even up to its R1 at the moment, but still bullish. Maybe just slowing down. Well, they certainly are slowing down. They've not got such big candles here, and there's a sign of a bit of softening. There'll be some divergence over the highs between here and here, and there'll probably be short traders coming in on that basis that it's going up. Anyway, we won't talk about them. Aussie dollar just really continued to the downside here. No, Aussie dollar, Aussie 200. Can't help myself. Still running to the downside there. Still remain bearish on that market. Not looking good. The surprise didn't help either. S&Ps, well, consolidation. 3 days of this week so far. Fourth day, looks like it's going to hang back a little bit. It's off a little bit at the moment. It's come pretty close, if not did the double top there into yesterday before it rolled over, but not the strongest looking market out there for sure, although it might come back. Believe me, I'm sure it will come back, because there's no change to interest rates next week. Dow Jones range bound as well here, still quite ugly. It last 3 days, small bars, nothing else there. The Nasdaq's been the best, but even that's put this sort of bearish engulfing candle on the previous, and is chipping off back at the moment. And with all what we're seeing with the Reserve Bank of Australia, the Bank of Canada increasing rates, I think there might be some sort of belief in these equity markets that the Feds might follow suit, which is not necessarily good for the equity markets for the short term. They'll probably bounce back. The DAX, it's been an awkward market, and it's another side-by-side day. It's literally tight range. You have to come down to the hourly picture or less to actually see what it's doing, but it's not even clean with its moves there, and well worth avoiding. FTSE, it's looking at this yesterday on the 4 hourlies here, this inverted head and shoulders, but what's it doing? It's not broken the low of the previous shoulder there, inverted shoulder, sorry. It might break out at some stage. I do get a feeling on a move like this we might see a bit of a fake out, so it might press out first, pull back, so just wait for that and maybe catch a bit of the bounce or the continuation that comes from it. Okay, that's pretty much it for me for today. funny old times we sit in, but it's to be expected. We've got a Fed meeting next week, and there's a lot of indecision, and traders ain't too sure where to do. Retail market makes diddly squat difference to these markets. We're talking like 5% or less of the overall Forex market. It doesn't matter if we all went long, it would barely make a difference at the moment. Right, on that cheerful note, I wish you a great day's trading or sitting on your hands and enjoying the sun. Take care, catch you later. Right, guys.